And what is basically technical analysis? Technical analysis is a method which is used to forecast the stock prices using the historical price and volume data. There are two ways of conducting the technical analysis. One is purely graphical in nature, where we identify the trends using support levels, resistance levels, and other Japanese candlestick chart patterns. And second method which we have applied in this study is applying the filter rules, which are purely mathematical in nature, applying the filter trading rules and then predicting the stock prices. So I have reviewed 128 research papers under this study, and the research papers were extracted from Whole Scholar, ResearchGate, Scopus, and Web of Science databases. The literature part has been categorized into 4 groups. The first group relates with the predictability power of moving average technical indicator. Second part relates with the relative strength index technical indicator. Third part studies the relationship between stock prices and trading volume. And under the fourth group, we have studied the perception of investors towards the relevance of technical analysis in formulating trading strategies. So, what are the research gaps we have identified in the previous or existing literature? Basically, the previous research are basically focused on the entire indexes. We have taken the individual stocks of the Nifty 50 index rather than taking the entire benchmark index. We have taken the 47 stocks of the Nifty 50 index as on 31st December 2023. And likewise, the predictive power of RSI are not well studied in the previous literature, but this is also a very important momentum technical indicator. So we have incorporated this technical indicator well in our study, and we have studied various rules. Third, we have studied the stock return and trading volume relationship by individually focusing on the Nifty 50 stocks and using the advanced econometric models, and we have also incorporated the trading volume and conditional volatility relationship using the Garch model. Fourth, many of the previous literature mainly focuses on the predicting power of technical analysis, but very few studies talked about the perception of investors towards the relevance of technical analysis. So we have incorporated the primary objective as well in this study by studying the investors' perception towards the relevance of technical analysis. The need of the study is that the stock market is driven is a key indicator which helps in the wealth creation and increases the economic growth of the country. The growing technological advancement, the increasing financial literacy, it's very convenient for the investors now to trade or invest in the mutual funds, in the shares, rather than to go on the traditional methods of investing. And also the traditional saving deposits are also declining, and the capital deposits are increasing as compared with the year 2001. It was around 4%, and in the year 2024 it is around 10%. So this data is showing that now the retail investors are moving more towards the stock market because of the technological advancement, because of the market's regulatory framework, and because of the easiest influence of influencers, which helps them to gain knowledge on the platform of YouTube, Instagram. Many of the stock exchanges have also launched the programs on the National Stock Exchange, which helps them to gain knowledge and which will help them to invest reasonably rather than to relying solely on emotions, speculations, or herd behavior. So, and technical analysis and fundamental analysis are two methods for predicting the stock price movements. And we have taken Nifty 50 stocks, and we have also incorporated investors' perception. The scope of the study is that we have taken 5 trading rules of the moving average indicator and 3 trading rules of RSI indicator. The sample companies are taken as 47 because the 3 companies' data was unavailable for the sample time period. And for the primary objective, we have taken 400 retail investors, and the time frame for the secondary objective is for the 10 years, starting from 1st Jan 2014 to 31st December 23. and the primary data has been collected in the year 23. The secondary data has been collected from the CMI databases, whereas the primary data has been collected from the northern region of India, from the retail investors who are investing using technical analysis techniques. The methodology used are independent t-test, ANOVA, and you can see this. We have the three objectives are there in this study. First is to examine the importance of moving average and relative strength index indicator in predicting stock prices. Second is to investigate the relationship between stock prices and trading volume. And third is to study the perception of investors towards the importance of technical analysis in formulating trading strategies. And likewise, we have formulated the hypothesis of the study. You can see. Let's talk about research methodology. The sampling element for the objective 1 and 2, these are the secondary objectives. So the sampling element consists of the 47 stocks of the stocks listed on the Nifty 50 index, and for the third objective, that is the primary objective, the sampling element consists of the retail investors. The sample size for the first and second objective is 47 companies because the 3 companies data was unavailable, and for the third objective, the sample size is 400. These are the 47 companies listed as on 31st December 2023. Sampling design. For objective 1 and 2, how we have selected the 47 stocks listed on the Nifty 50 index. Firstly, the NSE was chosen over BSE because of the equity trading activity. Second is the Nifty 50 index was chosen because it's a representation of 14 key, because it represents the 14 key sectors. So it's a barometer, you can say, is of Indian economy. And the 47 stocks are selected, the stocks which are listed on the Nifty 50 index. So the